So the company FranShares allows anyone to invest into franchise ownership for as little as $500. We're actually about to hit 35,000 people on our wait list. So when you invest into it, you get ownership in 55 different locations.
So the TNT Fund has two specific franchise concepts. So tell us a little bit about those two concepts and why you chose them.
So for one of them, we went with...
Welcome to the Zero to Profitable Franchise Podcast, the best place for you to come to figure out the right franchise to buy and how to get and stay profitable. My name is Tariq Johnson, and I've bought, grown, and sold multiple franchises and got myself free from corporate America, and now I'm on a mission to help you do that too. Here you'll find some of the most in-depth profitable franchise secrets, tangible strategies, and specific mindsets to help you create your dream life through franchising. What if you could invest in a franchise for as little as $500? In this episode, my guest, Kenny Rose, has taken crowdfunding and brought it to the franchise world with his company FranShares. If you like the idea of franchising, but don't really want to own one, then this is an interesting way that you can invest and still reap the benefits of a well-run franchise. So stick around to learn about how you can invest, how the investment fund works, expected returns, and the current franchise brands that they'll be starting with in their first $25 million raise. Now, if you want to buy a franchise in the next 12 months, you can check out my free franchise masterclass at buyaprofitablefranchise.com. And if you want to work with me and my team on finding or buying a franchise or resale business, then you can go to tariqjohnson.com/consulting, and we're happy to see if we can help. With that said, let's jump into episode number 19 of the Zero to Profitable Franchise Podcast. Hey, before we jump into the episode, if you've gotten value from any of the content I put out, it's not easy and it really takes a lot of time to create this content. So if you're watching on YouTube, please hit the like button and drop a comment, anything, even a smiley face. It helps the YouTube algorithm show the episode to more and more people. And if you're listening on a podcast platform, please rate and drop a quick review. Both of these things are free and take no longer than 30 seconds. Thanks so much, and I hope you enjoy this episode. Welcome to podcast episode number 19. I'm here with Kenny Rose, who is the founder of FranShares. Kenny, thanks for hopping on.
No, thanks for having me. I'm glad we could connect.
Yeah, likewise. So what you're doing is very fascinating to me. Can you explain what the company is that you started and what it does? Because I think people are going to be blown away by this.
I appreciate it. So the company FranShares allows anyone to invest into franchise ownership for as little as $500. So if you're familiar with like Fundrise or Masterworks and the ability to equity crowdfund into alternative investments, we're doing the same thing for franchise ownership. So we let people get passive income as well as equity growth from franchise investing without having to do all the heavy lifting.
That's very cool. That's very, very cool. So this is an interesting topic because I think there are people out there that want to be involved in owning a franchise in some capacity, but they don't want to be involved in the day-to-day. Actually, I have to connect you with this guy. I just had a call with a guy yesterday who he had filled out one of our coaching applications to work with us. And when we got on the phone with him, he was like, "No, I don't want to own one at all. I just want to invest in one. Yeah. I don't want to do anything." And that was the first time that we had that request. So obviously there's a demand out there. What are you seeing on your side of things as to how people are reacting to your fund?
It's been overwhelming. I love to see it. We're actually about to hit 35,000 people on our wait list, and they come from all walks of life. You know, you've got like everything from your 18 to 24-year-olds that want to, they're getting started in investing, want to invest a couple $100 to a couple grand, all the way to your ultra high net worth that want to do 7-figure investments. You get people who are already in franchising and want to like diversify their holdings, but also people who've just been franchise curious over the years. Like, they've always looked into it at some point, and then there's always a reason why you don't pull the trigger, whether it's the financial outlay, you don't have the right skill set, you don't have the time, you just like the corporate life. And some people just like, I just couldn't pull the trigger on it. And so it's been really great hearing all these different like I always love asking, like, what'd you explore? What was the research process like? And then there's a lot of people who've said, I didn't know anything about franchising other than I know it exists. And I'd always like, they always have the dream of like owning this big business down the street, but it's very hard to do that. So this has been a way for people to just, it's usually like oh, why did no one do that before? I like this.
Yeah. Yeah, that makes sense, and all of those reasons that you stated. So how does it work? Like, give us a basic breakdown of, okay, if I'm someone that has some money that I want to invest into the fund, like what's the overall time period? What's the targeted return? And how does the fund work?
Yeah, so well, for each fund, it's going to be a little bit different. So I can definitely tell you about the one that we just launched that we're in the middle of filling right now. So the way it works is we actually have one entire vehicle that people invest into that allows them to get diversified by different locations, different geographies, and different industries. So this one we call it the TNT Franchise Fund for takeout and trash because we have franchises in the takeout and waste management spaces. And so when you invest into it, you get ownership in 55 different locations. And this one is a growth and income fund. And so with that is that we are doing new locations of existing brands. In my years of the brokerage side, one of the first questions I'd always get is, "Do you have a resale?" And I'd always say, like, honestly, if there's a resale, I'm gonna be sniffing out why it's here first. Because frankly, like if you've got a good business that you want to sell, it friends, family, or a customer usually buys it first. And then even if it is on the open market, you're paying a huge multiple. So we wanted to give people like how you truly create wealth in franchising, which is getting new territory and building up the business there. And we wanted to find brands that, they're over that, like of over 4,000 brands out there, about 15% have 100 or more locations. So you're looking at ones that are well developed where they're past that 100 location mark, but they're not quite at the thousands of locations where you couldn't get any good territory then. So with the brands that we found, they had 350 and 600 locations respectively. And so, they had been really well proven out, but we could still go get major markets like Chicago, LA, Seattle. And so when you invest in this fund, you get ownership in all of those different locations. And then we actually handled the operations, either by, for part of it, we're working with a franchise management team that already works with over 10% of their locations. And then with the other half, it's a brand that most owners don't even work in it full time. They have a full time job elsewhere, and they're managing 2 to 4 employees on the side. So we wanted to actually bring infrastructure to this. So we raise more than we need to for like what it would generally cost to do because we want to bring in the proper operators to really help oversee this thing and create more foundation that's usually founded from other franchisees there. And so as you own, you get a combination of cash flow from the performance of the franchises, as well as an eventual sale of the franchise portfolio. And for this one, I like to over prepare people and say, hey, we're not paying dividends the first 18 months because we want to give proper time to ramp up the locations, not take money out of them while they're growing. And then at the end of the 5 year, at least 5 years time frame, we're planning on selling to private equity because private equity, if you've got 20 plus locations, they tend to want to snatch that from you immediately. And they're also able to overpay because their goals are different. They're not looking to maximize cash flow as much as they are beat what's going on in the S&P. And so that's the TNT fund. But, future funds will do things where we're investing into like existing locations on like a larger scale. Typically you won't have the equity appreciation part of it, but you'll get the income side of it. And so we're excited. There's a lot of different ways you can build portfolios and other franchise financial vehicles going forward.
Yeah, that is very cool, and so important to note. Okay, so it's not going to yield dividends for 18 months, but that makes sense. So this is for. So here's a question: who would be an appropriate investor for this specific fund? And I think that you guys are taking only accredited investors for this fund, right? So can you explain for the people watching what defines an accredited investor?
Yeah, so you nailed it on the head. For this portfolio, it's accredited investors only. Our next one's going to be available to everyone. But accredited investor, there's a couple different ways you can satisfy it. One is that if individually you've had an income of at least 200,000 over the last 2 years. Jointly, you could combined income of 300,000 over the last 2 years. You could also do it if you have $1 million net worth. Another way is if you're a knowledgeable employee, so people at FranShares, and then finally, if you hold a financial designation with the with FINRA, so it's a Series 5, 7, 66, I believe, maybe 85. There's a couple other ones in there.
Yeah. That's a whole nother conversation, FINRA licenses, because you and I have a similar background, which is in
Yeah,
the financial advising space, which
yeah.
is cool. Yeah.
From FA to franchising, it's a very rare path that we both took.
Yeah, for sure. Here's what's interesting. So the very last corporate role that I was in, I was the director of sales and operations for an alternative custodian. And so that dealt with self-directed IRAs. So someone like what custodian do you guys use?
Well, we use a couple because like some people are coming from Alto IRA. They're very big on like specifically doing that. Drive Wealth is our main custodian for it, but then we work with a couple other broker dealers to help facilitate both onboarding people, and then we'll have secondary trading. So we have to have another broker dealer for that.
Got it. Okay, cool. But so this company that I had worked for, they primarily played in the self-directed IRA space. So when people wanted to take their IRA and literally buy a piece of physical real estate, or if they wanted to lend money to someone, they could use their IRA, loan money to someone who was buying real estate, and use that as a note, which was interesting. This opened my eyes to that world, being on the traditional security side of things, stocks, bonds, mutual funds. I didn't know much about that world of things. And so I oversaw all of the institutional department. And so the institutional department we worked with private equity companies, hedge funds, etc.
Mm-hmm.
And so onboarding their assets, they may have had REITs, non-traded REITs, etc. But one day I talked to a guy who had private equity firm, and all they did was invest in franchises for their private equity fund.
Yep.
So they were in some specific markets, they were the largest franchisee for Buddy's Home Furnishings.
Oh, that's a name I've heard in a while.
As well as Pods. And
Really?
they had built up the market. So that was the first time where my mind went, that's interesting. And kind of a seed got planted in my mind of, one day raise capital and raise money to buy franchises. And I had owned my franchises at the time.
Mm-hmm.
So that's a perfect segue into how in the world did you get this idea?
It was a combination of different things, but I love hearing about that because honestly, a lot of it draws on the type of companies you were working with there. Part of it was, I have to say, well, Fundrise was really the trailblazer for like this equity crowdfunding into alternative assets. And so they did it for fractional investing into real estate. And probably 7 years ago, I read an article that they just raised their like Series A of funding from a bunch of venture capital groups. And, I was living in LA at the time, working in franchising, and I started diving all into this model. And I was just like, wow, this makes a ton of sense. Like, even for people that like couldn't afford to own real estate like that before, it was great for them, but also for the ones who could and just were getting access to new deal flow. I was like, it kind of helps both sides of the spectrum there. So I was like, I'm going to do this for franchising. I think I called it the Franchise Investment Fund back then. But I took a pretty big gamble at the time, and I said, I'm not ready to start this company yet. I'm like, it's a big idea, but like professionally, I'm like, I knew a ton about franchising already, but I was like, I'm not there as like a fundable founder yet. So I took a gamble that people outside of franchising would not really think about franchising as somewhere that needed to be disrupted. And then people in franchising, a lot of them work for like a food brand or a hair care brand. And they're like, in their vertical, and they don't look at like the greater industry. And so I said, I'm going to go start my own brokerage and grow that and really become like a thought leader in the space. And so I moved out to Chicago, started my brokerage, ran it for the last 5 or 6 years. Had a big emphasis on like educational content. So I just started like writing on Quora, reaching out to journalists and stuff. On Quora, they sent one of my answers. It was about how much a Chick-fil-A franchise costs. They sent that out to 40 million people. And then I also got picked up by Forbes, ABC, had a whole Business Insider article on my work in the industry last year. And so, all these things ramped up and I was like, oh, I built a good brokerage. But then finally the pandemic hit and I read an article, people were gambling in the stock market because sports weren't on. And I was like, oh, if FranShares was going right then, we'd have all sorts of money and assets under management. And I was like, all right, shut down the brokerage immediately. But another part that really helped like spur this idea was because of a deal I lost on once upon a time. I was working in LA and I had this client who was very, very excited to be getting on board with this auto franchise. And we were literally at like the midnight hour of him signing on the franchise agreement. Like we had his territory, everything was done. And then, honestly, I'm pretty sure we were just waiting for the franchise to send the documents for signature over. And they were like, oh, we want to get done by the end of the year. I'm like, all right, great. And then I think it was on December 31st, they called me and they're like, hey, by the way, we couldn't tell you anything because we had an NDA in place, but a private equity group just bought the rights for all of LA County. Your deal's off the table. And
Wow.
so that was like, all right, private equity is really playing in the franchisee space. And one day I need to get involved in there. So it was a whole bunch of different things. Then also just like kind of the background in finance that made me thinking about it more too. So just kind of a perfect storm of things.
Yeah, very interesting. And is there even anyone else doing this in the franchise space, the fractional investing?
No, I think someone made a landing page for it a while ago, but from what I saw, they didn't have any background in franchising, and so it's hard to go anywhere when you don't.
Yeah, that's interesting. Well, cool. So here's an interesting point to me, which is a whole nother avenue to go down, which is, a lot of people watching this podcast are people that have a dream to become an entrepreneur, and they're not happy in their job, and like the typical sort of candidate that may be looking at a franchise.
Mm-hmm.
And so from another perspective, what was that like for you to take something that you were doing, that you were having success in, give it up to pursue this dream of yours to start this business, which was a pretty significant amount of risk? So like, what was that like for you? And what has that been like?
Well, it was terrifying, let me tell you. But also, like, I was fortunate to where, like, I've watched my dad do the same thing, where, like, I've watched him make it all and lose it all multiple times over. It's also why I've always taken my job very seriously. It's like once upon a time, we owned a restaurant as a family, and it went bankrupt, and it ruined us for years, led to divorce. Like, I know the bad side of a business going wrong, but I also can see what happens when you take a big risk, just completely start fresh. Like, it was maybe 10 years after that, the restaurant failing, that my dad started a residential solar company in San Diego from scratch. And literally just started off just like hanging door hangers up. And eventually he grew that up to a 30 million a year business. And so like, we called them these days where we were using plasticware until they were down to 2 prongs. So like, I think that's what made me comfortable, is like, I've been there before. And like, I know how to eat ramen to survive. And I'm like, I will grind it out because like, that's what I was raised to do. And so, and it was also like, I'd kind of done the same thing to leave my previous job in the franchise space to start my brokerage. Like, obviously I'd known that a lot better. It was something that kind of existed, so it wasn't as big of a leap, but I'd already made these like smaller leaps. And so I think and also like, I'd been thinking about this for 6-7 years. So to me, it was, I had to do it. I think that was the things, I had that like burning drive and desire for it. And so failure wasn't really an option. And I think also like when you believe in it like that, people understand it and believe with you. And so, when it came to like fundraising for the company itself, I think that really showed in that like, hey, I'm all in here. I shut down the other business. Like, this is what I do, and this is how it's going to work.
Yeah, that's amazing. So everyone watching, follow your dreams, go for it. And even if you don't have that model and that example of someone in your life, you can still go for it and do it. So here's another question, which is, all right, so I'll preface first with a comment, which is, okay, so my wife and I opened our first franchise. we took a $310,000 home equity line of credit on our house to open our franchise, which was a tremendous amount of pressure for me because I was the one driving it and pushing my wife to like, let's do this. We got to do this. And so in the back of my mind, I was terrified.
Mm-hmm.
And, those thoughts go in your head about what if I fail and ruin us?
Yeah.
And so for me, that was motivating. And I used that fear to hang on for dear life. But as you enter into this, you're taking other people's money and then utilizing it. So what does that feel like for you, that pressure to succeed?
I find it fueling too, but also because I've always been a guy who's, you got to stand by your word and look yourself in the mirror. And so honestly, when I've been in the franchise brokerage space before, I fired more clients than I worked with because you've got to, it's not about making a buck. It's about looking at the overall long-term vision. And so there's some people who were just trying to, it was a last case resort, not I want to do this. And so when they're that type of person, you gotta let them know, hey, I don't think this is right for you. You don't just start a business as a last resort. You got to have that fire going that's driving you. And so
Yeah.
I view that with this, where I think people trust me in that same capacity to do what's best for them and help grow their nest egg. And honestly, I want to create this as a whole category of investment in the future. And so it all starts with this fund too. So I want to be able to look back on this interview in 20 years and be like, yeah, that's what I was doing it for. And so there's a ton of pressure, but also it's coal in the fire to just keep this train moving. So I'm excited, but also, yeah, definitely a ton of pressure.
Yeah. I'm sure. And then what was that process like? So, getting the initial capital to just get things started, because this is just the legal bill alone, I'm sure, was significant to create the structure.
Mm-hmm.
Did you guys do a Reg D? Is that what you did?
No, so I actually went out and raised a venture round. Well, actually, it's funny. I kind of did it backwards. Normally in the tech space, you go out and find a venture capital, a VC company to go lead your round and then go find other investors to fill out the rest of it. Well, I reached out to over 350 of them and had maybe 2 or 3 conversations. And it was interesting idea. Maybe come back later. It was kind of just get out of here. And I was like, you know what? I will prove it to you. Because I think also the word franchise doesn't really pull people in from the venture capital tech world. But I was like, I will prove it to you. And so I went out and started looking for angel investors, and not people I knew directly. I've a rule, we don't sell to friends and family. If they reach out and they want to, that's a different story. But I reached out, I posted online, LinkedIn, Facebook, wherever, and ended up drumming up a good stable of people who were interested in this. And then when I started doing the fundraising, we raised about $570,000 in 3 weeks. And then I pumped the brakes there. I was trying to do $1 million round, and I was like, you know what? I need to get a venture capital company in here. It's the credibility, it's the support, it's a lot of things. And it's amazing when you reach back out to everyone after you've raised over $500,000, they're like, oh, yeah, let's talk. Because they like a lot of what other people have invested in or what they know about. But still, even when you're that VC high level area, they want to do things that other VCs have invested in or they know about it. And so everyone wanted to talk, and I got the same feedback every time. It's well, this is an amazing idea. You're clearly the guy to do it, but I don't know anything about franchising. And honestly, I'm I get that. That's fine. Don't invest things you're uncomfortable in. That's kind of how I've always lived my life. And so, but also I think everyone understood that this was something building. And so they always referred me to someone else saying I want to be that one that referred you. So when you're raising your next round, you let me in. And eventually I got introduced to Chicago Ventures, based right here in Chicago. And for one, I love that they were local, but also they were just coming off investments into Cameo, M1 Finance, Spot Hero. They had 6 companies turn $1 billion companies last year. And
Wow.
I was talking to usually start with an analyst there, and Stephen Cook, great guy. He really understood this and got it. But at the same time, I was until I'm talking to one of the partners, I don't know if they're going to really get in the same way. And So when I was finally going to meet one of the partners over Zoom, because this is like still everything's locked down, I hop in the Zoom. Steven's there, and he's like, "Oh yeah, Stuart, the partner's about to hop on." And right before, he's like, "Hey, I just found out Stuart's actually invested in franchising before." I'm like, "What? How have you never mentioned this before?" And so Stuart hops on the Zoom. Mind you, no video, just a voice. And I just kind of bulldoze my way through, and I'm like, "Stuart, I heard you invested in franchising before. Tell me about it." And he's like, "Oh, I rolled up some partners and I rolled up 500 KFCs to be the largest franchisee in the system, and then flipped it to private equity." And right then, I'm just like, "Oh." And I just say, "Oh, so you get this?" He's like, "Yeah, I get it." And right then, I'm just like, "Oh, we're done here." But then it was funny because he didn't say a word the rest of the call. It was literally just like a Q&A with Steven and I. So like, I think he gave Steven a list of questions, and so I'm kind of just like being interviewed, and I'm just being watched by this faceless figure, seeing how I react and how well I know my stuff. And then at the end, he finally is like, "Okay, thanks, nice meeting you." And so I'm just sitting there afterwards. I'm like, "Wow, what just happened there? Like, did I just totally miss the mark or what?" Like, he didn't say a word until the end. And then I get a text from Steven 5 minutes later. And mind you, he's never texted me before. He was like, hey, can we chat? I'm like, "Yeah, sure." And so we hop on a call. He's like, "Yeah, Stuart absolutely loved it. He's in." And so I know now that Stuart's just one of these guys who, like, he sits back and he monitors and watches. He's a good judge of character. He's by the numbers. And so, like, he understood it. He's just not really like the "I'm going to tell you I understood it" thing. And so then from there, they ended up filling out the rest of our round. And
Wow.
yeah, got started from there.
Wow, what a story. That's incredible. Wow, that's really cool. So, here, I just want to acknowledge you, Kenny. I mean, congratulations and great job. No, seriously, man, to have a dream this big and to have the cojones to really take this on and go after it and take that leap of faith, and what you've built so far is absolutely amazing and really impressive.
Thank you. I really appreciate that. Super nice of you to say. And it's funny before when you're talking about like pressure and like powering through things, it's like, man, when I finished with that list of VCs I had, and I was just like nothing, like I think a lot of people probably would have quit then. I was like, no, they just don't get it yet.
Wow. So what a powerful mindset, right? Because I try to talk a lot about mindset throughout my content that I put out in these podcasts, because it's not just about, this better than anyone. It's not just about the strategy. Anyone can have the strategy to say, "Hey, I have this kind of crazy business idea. Let's create a fund that invests in franchises. And the way that I'm going to do it is X, Y, and Z." Well, after you've sent 100 emails and no one has responded, your idea, like, you start to kind of doubt yourself. Did you never have that feeling? You were just like, "Hey, these people just truly aren't getting it, and I know I can make this happen"?
Oh no, it was totally depressing for a while. You're just like, "Why are people not getting this? Like, I know it'll work." And you just have to, like, I don't know, like, sit back and see kind of dissect what's going on. You can't just like blindly burrow through, because sometimes maybe it's just not a good idea. But I sat back and dissected it, and the little feedback I got from a couple people, and just like talking to other people in, I guess, the startup world and franchising, and I kind of heard just more of like, yeah, if it's not like right up their alley, like especially for how young it was, and again, most people don't know about franchising. I was just like, what? I just haven't found the right people yet. I'm going to go find the right people. And so, like, sometimes you have to pivot strategy. Like, it's funny talking to, like, these other VCs that want into, like, our next company round, where they're like, "Oh, so, like, tell us about the fundraising process." I tell them that story. They're like, "That's not how you're supposed to do it." It's like, you're supposed to go find a venture capital group to lead the round. That's why it's called leading the round. Or, well, it's that and technically doing, like, half the raise a lot of the time. And so, it was just like, well, I couldn't find someone. And so I wanted to go find people who understood it in general. And, it was people who came from like franchising and finance and tech, and like they all got it. And so, I think that also helped, like not just having the money, but showing like people who were involved with it. And it was people who had hundreds of millions in exits, and people who were largest financial advisors in the country and top options traders. And people were just like, "Oh yeah, I get this. This is an investment that needs to happen." And so I'm like, yeah, like, people, and honestly, I was not taking, I don't want to say small checks, but like I got all people who were offering like 10 or 20 grand checks, and I was like, "Hey, like, based on good feedback I got from other people who've done fundraising before. They're like, set your minimum at 50 grand for an angel investor and don't crack on it. And I passed on a lot of different investors because of that, but then I found the right ones. And also, like, when you can find people who are willing to invest that much in an idea, essentially, like I had a landing page and an idea at the time. And I'm not the best web designer, but you teach yourself a lot of things. And so I was like, like I think like once you get that first check, it's just like a huge sigh of relief. It's like this has legs. Like now let's go run.
Wow. Yeah, that's incredible. A really incredible story so far, and I know that it will just keep getting better. So tell us about this specific fund, the TNT Fund. When does it close, and how long can people continue to invest in it?
Yeah, so we're doing our first closing in actually about a week or two here. But then, if there's extra room, like people can come on and just keep adding on. Like once it hits 25 million, we close the fund. But honestly, it's funny. We have to work with the broker dealer to like verify accreditation status. And I told them to like buckle up. There's gonna be a lot of people, and they're like, "Yeah, sure, okay." And then now they're still going through hundreds of people, and we've got another like 2,000 or so going, like starting the phase and like going in, creating their accounts and stuff. And so honestly, we're ended up going over our deadline just because like the broker dealer can't really do them fast enough. And so
Wow.
yeah, so then ideally it's just going to be like, hey, once we hit that line, like first come first serve until we fill it up.
Yeah, that's very cool, interesting. And then so tell us about the TNT Fund has two specific franchise concepts. So tell us a little bit about those two concepts and why you chose them.
Yeah, so I wanted to be diversified again by industry and geographically, but I also didn't want to spread ourselves too thin. So like, even originally I wanted to do 3 brands. It's like, hey, we've got a really solid formula for 2. Let's stick with the 2. And so for one of them, we went with the food space because that is what people know most in franchising. And so we want something that like I didn't want to necessarily be in the war for pennies and fries and burgers or anything like that. And so I've known the brand for years, but I ended up we chose Teriyaki Madness. And Teriyaki Madness, I find a couple reasons I love them. One is that when you think about like quick service restaurants and the Asian food space, most people go straight to Panda Express, and that's kind of where it ends. And so to me, that's like a massive food segment that doesn't have a ton of like heavy competition. It's independence and one really big franchise brand. And so that was one that really stuck out. They have over 350 locations open or in development right now, which is another big thing. Like we want to see that traction. Like you could have 20 of the best locations possible, but like, when I'm working with the, outside investors like this, like it can't be, hey, you got a really good start. It's like, hey, it's got to be a winner. I cannot gamble with people's money in any way. And so that was another thing, was that they were at the right growth area where like hundreds of locations, but also we could still get into these major markets. So we're doing Houston, Denver, Chicago, and Tampa. And then another thing was the leadership. So Michael Haith is their CEO, and he's grown a couple brands to a few hundred locations. One was Maui Wowie Coffee and Smoothies, took over and grew to like 400 or 500 locations and exited to private equity. Another one, Doc Popcorn, was a smaller brand. He grew to 100 plus locations and sold to Dippin' Dots actually. So they were doing co-branded stores with them. And also just I've seen, I've worked with over 600 franchises over the years. And so when you see like how they are built as a team and their marketing and all these things, like it feels, even though they are a big brand, it feels like an even bigger brand. Like you could tell when you go to their website, when you visit the stores, you check out their app and the loyalty program, like they are built for growth. And you can tell like that's a repeat CEO taking over and running with it. And then finally was manageability. So Teriyaki Madness has honestly a very smart thing they did. They realized that some people want to be absentee, and so they created a management company for it. Basically cleared out a bunch of people from like Smashburger corporate, started a management company. And so I think we sold them out for doing this anywhere else now. But they'll handle site selection, build out, hiring, ongoing management. And their incentives are aligned with yours when you're working with them. So we pay them a flat fee per store to like keep their lights on, but then they don't make any money until they hit over 1 million in sales. And so that's about where an average location's doing. And so they have to really blow it out the doors. And they already run over 10% of the locations. So that was one where it's like food is definitely more complicated, but when we have a management company like that, and a really big and continuing to grow brand like that with the leadership, it felt perfect for me. And also, I love Asian food, not gonna lie. And I love their food. I'm actually going out to one of the locations in I'm in Chicago, but they have some in the suburbs here, so I'm going to go visit one and do some filming there, which I'm excited for. And then the other side, I wanted to show people like, hey, food. Let's take you to the total opposite end of the spectrum in the franchise world, because most people only think about food being franchised. And so waste management, trash, the complete opposite side of the store. It's just a service business that most people would never think is franchised. And what Smash My Trash does is as simple as it is brilliant, where especially in the commercial space, if you have a construction, manufacturing, distribution company, anything commercial with dumpsters out back, they've got these giant commercial dumpsters, obviously, and it costs a ton of money to haul them off to the dump every time. So Smash My Trash, if you've ever stuck your foot in the trash can and shoved the trash down so you can keep getting more in before you take it out there, same type of principle where dumpster looks full, but they bring this giant rig up and mash everything down with a couple 1,000-pound steel drum with razor teeth on it, mashes everything in it so that it starts clearing space in there. So reduces it by up to 70% of to empty space. And so, when you do that, you can then just keep filling the dumpster back up and then get it hauled off to the dump. So it saves the business owners 20% on their haul off expenses. So, it's like trash is repeat. When you're looking at like recessionary times, people are looking to reduce costs, and any company that's got a dumpster is going to want to use that service. And they are as high growth as I've ever seen. They've sold about 600 locations in the last 3 or 4 years. And we were able to get some of the last great territory. Like they're sold out in most of the country. And basically I approached their CEO and said, hey, here's what we're doing with FranShares. And frankly, I've been listening to all the weekly franchisee calls. I'm like, here's where I think we can improve as a large scale franchisee for you. And it was about creating this extra infrastructure, actually having general management, and really paying for amazing salespeople. Like sales really drives the business. And I'd hear about a lot of franchisees that are spending 30 or 40 grand on a salesperson, and and plus commission. I'm like, honestly, like you could probably find someone better. And so I was like, I'd rather find someone you spend double that on. And the margins are there. Like they've got 50% EBITDA margins. I'm like, go find someone who can blow that business up even more, and pay them for it. And so they heard all this, and CEO was like, yeah, that makes sense. Like this is what I've been asking franchisees to do. Where do you want? And so, like California and Washington are two of the last states to get approved for a lot of franchisors because they're registration states. And so we were able to get about half of LA County and most of Greater Seattle. I also specifically made sure we got where Boeing does their manufacturing up there, because that's going to be a great contract in the future. And then someone had actually signed on for the rights for New Orleans, but they didn't have the funding in place and backed away. So we ended up snagging all of that. We got first dibs on it. They're like, hey, it's coming back to the market, but you get first dibs. And then we got the entire state of Rhode Island, too. They had surprisingly great demographics for the business. It's only 3 territories out of the 30 of them, but I really liked it. And plus, it added for more diversification there. So those are the 2 brands we got going on. Very excited to be working with them.
Yeah, that's awesome, and an interesting criteria and process. And I'm sure there will be many more brands and future funds to come along.
Yeah.
A little funny story. Do you have kids?
I don't.
No. Okay. All right. So all the parents listening may have heard of a guy on YouTube called Blippi. Have you ever heard of Blippi?
Yeah,
you know Blippi?
Oh yeah, my nephew loves Blippi, and I think I know where you're going with this too.
Oh yeah, he had a Smash My Trash segment. Yeah, and I was sitting on the couch about a week ago. I think it was last weekend, watching Blippi with our toddler, and then all of a sudden there's the Smash My Trash truck, and I just thought it was so funny. I was like, oh, that was very good product placement and very strategic of Smash My Trash to put that on. I wonder who approached who, if Blippi approached them or they approached Blippi.
That is a great question. I'm very curious too. I never asked, and because I know there was like another one. I think it was like a similar thing to Blippi. It was a Handyman Hal. I saw a thing for that too. So I think someone at Smash My Trash is just making some very good friends in the YouTube space.
Yeah, it's smart. Yeah, very smart. Cool, man. Well, if people want to go check out FranShares, learn more about it, where can they do that?
Just franshares.com, or if you're on social media anywhere, FranShares is pretty easy to find. I always suggest connecting with me on LinkedIn. I love talking about stuff on there, and yeah.
Awesome. That's great. Well, we'll post the links. Kenny, thanks so much for the time and telling us about FranShares. And again, well done, man. Congratulations, and wishing you much success in the future.
But thank you so much. Like, for one, thanks for having me on, and also as someone who truly understands the franchise world, I always appreciate when people really get it. So thank you very much.
Absolutely.